Hey everyone. Ready for another deep dive? Let's transport ourselves back in time for a second. Imagine like the bustling marketplaces of ancient Babylon or Greece.
Mm.
You know, what could a day's work get you back then? A fancy chariot, a feast fit for a king.
Well, maybe not that extravagant, but it is fascinating how consistent the value of a day's labor was across different historical periods, especially when measured in silver.
Okay, now you've got me curious. So what exactly could a day's work get you in silver?
It was roughly about a tenth of an ounce, and this held true for centuries. It's kind of like this hidden thread connecting civilizations across time.
A tenth of an ounce of silver. It's like we're deciphering a secret code from the past. But enough cryptic talk for now. We're focusing on Andranik Aghazarian's Cold War 2.0, Dawn of the Asian Millennium today, specifically Section 7, the New Gold Rush.
And Aghazarian really lays it out well in that section. He shows how this historical view of silver and gold helps us understand what's happening in the world of money today.
All right, let's get down to brass tacks. What could people actually buy with that tenth of an ounce of silver back then? Let's see some examples.
Well, in ancient Greece, for instance, that tenth of an ounce would be a drachma coin, and it could buy you 3 kilograms of olive oil.
Olive oil. No wonder those ancient Greeks were so healthy. Already on the Mediterranean diet, I see.
Exactly. Or you could get a week's worth of wheat with that same drachma. Imagine that. So basically, a day's work could feed you for 2 weeks.
Wow, that really puts things into perspective. Food for 2 weeks for a day's work. What about other time periods?
Let's jump ahead to medieval England. A thatcher's daily pay, which was still about a tenth of an ounce of silver, could buy you a brand new axe.
An axe, huh? Or what if you weren't in the mood for tools? What else could you get?
Well, if tools weren't really your thing, you could always go for 2 dozen eggs instead.
An axe or eggs. Okay, I see the pattern here. It seems like this silver held its value pretty well over time. But how does all of this connect to what's happening in today's world?
And that's where things get really interesting. You see, with all the ups and downs of paper money, what we call fiat currency, there's this renewed interest in things with real tangible value, like good old-fashioned gold and silver.
Ah, so it's kind of like a back to basics movement in the financial world. Everyone's searching for something solid, something reliable. Is that where this new gold rush comes in?
Exactly. Aghazarian's book highlights this trend of central banks worldwide, especially those in Asia. They've been on a gold buying spree ever since the 2008 recession. They're diversifying, getting away from the US dollar, and you guessed it, turning towards gold.
Okay, so this isn't just about individuals stashing gold bars under their mattresses. We're talking about major institutions making big moves. But what's the motivation behind all of this? Is it simply about diversification, or is there more to it?
Well, diversification is certainly a factor, but let's consider the bigger picture. We've had the 2008 recession, pandemics, and now rising geopolitical tensions. It all adds up to a lot of uncertainty about the future.
So basically, gold is like the ultimate security blanket for these big institutions, like the financial equivalent of hiding under the covers when things get scary.
You could say that. Gold is seen as a safe haven, a store of value that stood the test of time. When the economy gets shaky, people turn to gold because it feels, well, safe.
Makes sense. But we're not just talking theories here. Aghazarian backs this up with some pretty compelling data, right?
Absolutely. In 2018 alone, global bullion holdings surged by an estimated 651.5 tons. That's the biggest increase since 1971, the year the U.S. went off the gold standard. It's a clear signal that something big is happening.
651.5 tons. That's a lot of gold. And you mentioned earlier this trend is particularly strong in Asia.
Exactly. Countries like China, Russia, and Poland are leading the way. They're buying gold like there's no tomorrow.
It sounds like they're trying to tell us something. What message are they sending with all this gold buying?
It seems to me they're signaling a lack of faith in the U.S. dollar as the world's leading currency. They're hedging their bets, getting ready for a possible shift in global economic power.
Wow, this is starting to feel like a game of high-stakes financial chess,
Right.
with gold as the most prized piece.
Precisely. And while all this focus on gold is captivating, we can't forget about silver's role in this precious metals game.
Right, silver. We can't leave it out of the party. What's silver's part in all of this?
Well, there's something called the silver to gold ratio. And lately, it's been acting a little strangely.
Okay, you've piqued my interest. Tell me more about this ratio. What's going on with it?
Well, historically, you'd need about 8 to 15 ounces of silver to equal 1 ounce of gold. It's like you're using a scale, right? About 10 ounces of silver would balance out that 1 ounce of gold. But things have gotten a little out of whack lately.
Out of whack, like did someone tamper with the scale or swap out the golds for something else?
Not exactly. But get this, in March 2020, that ratio hit a record high of 126.1. You'd need a massive 126 ounces of silver to equal just 1 ounce of gold.
126 to 1. That's wild. It's like the scale completely tipped over. What happened? Did silver suddenly lose its value?
Not quite. It's more about market psychology and how people perceive value. At that time, for various reasons, silver was seriously undervalued compared to gold.
So let me get this straight. If someone bought silver back when that ratio was sky high,
And if history repeats itself, that ratio should eventually go back to normal levels.
wait a minute. Are you suggesting that could have been a huge investment opportunity?
It's definitely a possibility. If you bought low and then traded your silver back for gold once the ratio normalized, you could be looking at a pretty nice return. But of course, this is all hypothetical.
Hypothetical, maybe, but still exciting. This ratio feels like a secret weapon for those in the know. The
Yeah,
savvy investors.
exactly. It all comes down to understanding the relationship between these two precious metals. And speaking of savvy investors, let's revisit that idea of smart money versus dumb money that Aghazarian talks about.
Oh, yeah. The big institutional investors, the central banks, the folks who always seem to be one step ahead.
Think of them like expert chess players who can see several moves ahead. And right now, they're betting big on gold and silver. Aghazarian even mentions that China has been strategically buying up gold mines across the globe.
Gold mines. They're not playing around, are they? That's taking their gold commitment to a whole new level.
Exactly. They're going all in. And they've also been encouraging their citizens to invest in gold. It's like a nationwide push towards accumulating precious metals.
So it's not just the government hoarding gold, it's everyday people too.
Precisely. And China's not the only one. Think about India with its deep-rooted cultural fascination with gold. It's intertwined with their traditions, a symbol of wealth and security.
It's practically woven into their cultural DNA.
You could say that. And this cultural factor is a major driving force behind demand. In fact, China and India together now account for more than half of the global gold market.
Wow, that's a huge shift. It's like the center of gravity for gold, maybe even for the global economy, is moving eastward.
That's a sharp observation. And this shift speaks volumes about the changing world order. We're seeing a growing lack of confidence in the established financial system, particularly the US dollar.
Okay, let me see if I'm connecting the dots here. We've got the smart money pouring into gold and silver central banks, moving away from the US dollar, and Asian countries becoming major players in the precious metals market.
You got it. All these trends are interconnected, painting a picture of a world in transition, a world where the traditional financial order is being challenged and where precious metals are regaining their importance.
Okay, so what does all of this mean for the average person? Should we all start digging for gold in our backyards?
Probably not, but I think Aghazarian's message is clear. We need to stay informed, educated, and take control of our finances. Don't just follow the crowd or get caught up in the latest financial fads.
So less backyard gold mining and more research. Education. Trying to grasp the big picture.
Exactly. Knowledge is power, especially when it comes to your money. Understanding these historical cycles, the shifts in global power dynamics, and the enduring value of precious metals, that's how you make informed decisions for your financial well-being.
So maybe we should delve a little deeper into this silver to gold ratio. I'm really curious to learn more about this potential opportunity you mentioned.
Absolutely. Let's explore that further.
All right, so we've got this silver to gold ratio that's gone big crazy,
Yeah.
hitting a record 126 to 1. But what does that really mean for someone who's not a financial expert?
Well, basically, it means that silver was incredibly cheap compared to gold. Think of it like this. You walk into a store and find a designer dress marked down 90%. That's a steal, right?
I get the analogy. So silver was like that designer dress on super sale. But how do we know the price of silver will go back up? What if it stays on sale forever?
That's where looking back at history can help. While it fluctuates, this ratio has a tendency to return to its historical average over time.
So if you're patient and understand these long-term trends,
You could potentially buy silver when it's low, wait for that ratio to go back to normal, and then trade your silver for gold and make a tidy profit. Of course, it takes patience and a bit of a contrarian mindset.
buy when everyone else is selling and sell when everyone else is buying. It reminds me of that old saying, buy straw hats in winter.
Exactly. But as Aghazarian emphasizes, this isn't about getting rich quick. It's about understanding the fundamentals of smart investing. It's about recognizing that historically people have turned to tangible assets like gold and silver whenever there's been uncertainty about paper currencies.
It's like they're saying, I may not trust what's happening with this paper money, but I know this gold coin has held its value for centuries.
Precisely. It offers a sense of stability, a way to protect yourself from the unknown. And if the smart money is putting their faith in precious metals, it's worth considering.
So to wrap things up, what are the main takeaways you'd like our listeners to remember from today's deep dive?
I'd say first, history can teach us a lot about money and the lasting value of precious metals, especially when things feel uncertain.
It's like looking back at the ancient world and realizing that some things never change.
Exactly. Second, we're in a time of major global economic shifts. There's a growing distrust of fiat currencies and a change in the balance of power happening on the world stage.
And in the middle of all this change, precious metals are making a comeback.
That's right. And last but definitely not least, knowledge is power. The more you know about these trends, the better equipped you'll be to navigate the financial world and make smart choices for your own future.
So the next time you're holding a dollar bill, think about its history. Think about what you could buy with a day's work in ancient Greece or medieval England.
And ask yourself, in this ever-changing world, what role could precious metals play in protecting the value of my hard-earned money?
It's a question we should all be asking. And on that note, we'll conclude our deep dive into the new gold rush. Thanks for joining us.